Test, test, 1, 2, 3. What's going on, team? It's Ricky with Technical Solutions. Hope that you guys are all having an amazing Sunday. Welcome to our Sunday Stock Talk for those that are joining us for the first time. My name is Ricky. I upload new videos every single day about the stock market. If you ever want to stay connected, or even if you just want to send me a direct message, if you have any questions as an absolute beginner, shoot me a direct message. It's the first link in the description of this video, and the private group that gets to watch me trade live every day is the second link in the description. It's the Learn Plan Profit Group. It's the only team that I work with on a closer basis. And yes, they get to see me trade live every single day. So without further ado, I'm going to say what's up to everyone that has been waiting in the live chat. I go live every single Sunday for about 30 minutes, and I break down the top 10 stocks that our group members see value in. So if you ever want to tune on into any of these, all you literally have to do is subscribe to the channel, drop a thumbs up, and turn on your post notifications so you get alerted when it is that I go live. So as of last week, for those that were unaware and or for those that what's it called? So I hear an echo. What's going on? What's up? What's up? Hopefully that echo goes away. But one of the things that happened last week is, as you can see on my screen, there was a very significant sell-off on Tuesday. It was the CPI data report. It came in hotter than expected. So inflation, isn't dropping, especially core CPI. Isn't dropping at the rate that we thought it was. And this upcoming week on Wednesday, so it's going to be September 21st, if I'm not mistaken, 2 p.m. Eastern time. Wednesday, they're going to be announcing the FOMC Fed minutes. I will be live streaming that on my channel. So again, another reason to make sure that you subscribe. Market dropped. Market traded sideways on Wednesday, and then market sold off on Thursday. And then we had pretty much almost a break-even day. It was really kind of like the last hour to hour and a half. We saw a lot of buying activity, and it made sense, right? So a lot of people didn't understand why that was happening. Again, you have to imagine the market was selling off all week. A lot of people were probably shorting the overall market. But then as we get into Friday, right, the market sold off a lot. They're probably going to want to cover their shorts. And when you cover your shorts, you have to buy back those shares. So it makes sense on why there was more buying pressure, people locking in profits that are shorting the overall market. But yeah, I'm very pumped to see what happens on Wednesday and how the market reacts. This is going to be single-handedly probably the most important report that we have left for this month. So please make sure that you are aware of that. If you don't already know, the Fed FOMC minutes are going to be on the 21st of September, 2 p.m., and this will shift the market. It's expected that it's going to be a 0.75%, but even a full percent interest rate hike is not out of the table. So will you be live streaming the FOMC meeting? Of course, I'd be happy to. So that's going to be the plan. Again, I want to make sure enough people show up. So continue to like these videos, and the day before I'll send out a little announcement. And if you're a part of our Discord, right, you'll be kept up to date. So make sure you subscribe to the channel, and if you want to join a free Discord, it's the first link in the description. So all right, without further ado, let's go ahead and start breaking down some of your guys' top stocks. So one of the things that I always talk about is anytime that the market dips, our job is not to be perfect. We will never time the market perfectly. I feel like this is like something that a lot of beginner investors or beginner traders always focus on. It's like, I want to buy at the lowest price point. I want to buy at the cheapest price. And realistically, again, a goal should just be to buy in at a good price. Never are you going to be perfect? Never or rarely ever are you going to buy at the absolute bottom. And you should set realistic goals for yourself, right? So when the market's oversold like this, one of the things that I love to remind my Learn Plan Profit Group is that now is the time where you prepare. Not when the market is recovering, you're already too late, but now is where you create that plan of action. That's why I love these Sunday stock talks, because it kind of gives us like a refresh outlook of the overall week. What's happened? Are we cheap? Are we oversold? Are we overbought? If you're a deal hunter, right now you're kind of like, in the prime time. There's deals present. Apple's oversold, Amazon's oversold. A lot of companies are oversold, and huge ROI potential when the market recovers. And one thing that we know is markets always end up recovering. It's not that you have to force a heavy purchase right now, but at least having that plan of action to be able to follow through with a good trade plan. So, all right, let's go ahead and So let's see. If you guys want me to break down your stock, just please make sure you share it in the live chat. Let's go ahead. Let's do Microsoft for Danny. What's going on, Danny? I hope that I earn your thumbs up on this video. Microsoft is definitely one that I've been paying attention to. Actually, some of my friends came over today and we were talking about Microsoft. Microsoft is approaching previous lows that we had back in June. And you can see that we're retesting those levels right around 240, which is a previous support range. Again, it's not about finding the bottom of a stock, right? Because if the Fed FOMC minutes, when it comes out and the interest rate hike is announced, the market can drop even further. So this is where position size comes in, where you control how much money you invest. Let's say your intention is to invest, $1,000 into Amazon, whatever it is, right? We focus on percent. So instead of buying $1,000 all at once at the current price point because the market is still bearish, maybe you can split it up into 3 different positions. So maybe you buy 33% of it now, maybe 33% of it later when it's indicating signs of an uptrend. And then when it has full-on confirmation, you buy the other 33%. However it is that you want to do it, but now it definitely does make sense on why you're paying attention to it. I think it's very oversold based off of previous patterns. I mean, looking at Microsoft with where it's at right now based off of previous highs, 42% ROI based off of previous highs, but obviously, again, we're nowhere close to those previous highs, nor is the market going to recover in just a week, right? So also setting realistic expectations on timeline is very important. But even to the moving average, if you look at the moving average, last time I got rejected there, that's 17%. It's oversold. You can take risk to reward ratios into consideration. But yes, I definitely like Microsoft, and Microsoft is actually in one of my watch lists of companies to invest in long term. If your intention is to make money right now, no, I would stay away from Microsoft. It's bearish, right? If you're trying to make money long term, I think I think Microsoft is a great stock to continue to look into. I think we can all agree that it's not going anywhere anytime soon. So let's go ahead and move on to the next one. Let's do Meta. I like Meta because a lot of people, what the heck is that? The thing that I like about Meta is that Meta has been getting absolutely crushed. Looking at previous highs of 384 ever since they made their transition from Facebook to Meta, I just feel like they're going through a really rough patch right now. I think in 5 to 10 years, we're going to look back and be like, wow, that was either one of the worst decisions that Facebook ever pivoted to, or they're going to be worth 10x of what they are worth now if the Meta platforms or the Metaverse pans out the way that they think it will. As of right now, it's 162% ROI to previous highs, but you have to understand one of the big reasons that Facebook or Meta is dropping is their ongoing investment into creating the Metaverse in that type of space, right? So they're burning through a lot of money quarter over quarter. The company as a whole owning, what they call as their family applications such as WhatsApp, Instagram, and Facebook. I mean, revenue-wise, they're still printing money like never before, right? But with that being said, they're spending and investing so much money in the metaverse that it's a bold investment, right? So I would say that Meta, based off of previous patterns, was more of I would say I would have never seen Facebook go anywhere, right? But now with the challenges that they're experiencing with, the ad restrictions through Apple and as well as the competition through TikTok, this whole metaverse thing really needs to play out, right? And I think that long term it could be a great stock to invest in, but it's going to take some time, years, right, from now. If you're trying to make money right now, then no, probably not a stock that I would consider day trading, right? Direction's not in your favor, market sentiment is not in your favor, quarter revenue is not in your favor based off of how much they're invested into the metaverse. So I didn't get a haircut. Ricky's haircut looking fresh. Hercules, I appreciate it, but no, I didn't. I got a haircut maybe 2 weeks ago. So yeah, no, I appreciate it. Thank you. Let's do LCID. So Ricky, what do you think about the whole metaverse? Do you see almost everyone transition into that space? I don't like to talk bad about things I don't really understand. I feel like it's always the loudest people that are the least informed. And I mean, I respect Facebook in being so aggressive in wanting to, try to pivot and not being afraid to do so. But I don't know much about it. I think it's a bold move, but I really hope it pays off for them. I never want to hope for someone's failure. It's a space that I would be more than willing to learn more about. Can I see that Can I see that transitioning happening? That transition happening anytime soon? Probably not. I just, especially right now with our current market and our current recession, and the way that our economy is working right now, anytime that there's this type of like uncertainty, things like this, where they're transitioning us or trying to transition into being innovative, I feel like innovation is always paused during recessions or down times in the economy. So I think it's going to take longer than expected, but I wish them nothing but the best. Let's go ahead and do Shopify. Let's break that one down. So let's do Shopify. So Shopify, I would call this kind of like a Hail Mary type of stock. Shopify has gone from 176 and is now trading at $30 a share. Shopify is a stock that, the company as a whole, I love the company. I love the idea. I love what it stands for. It has huge ROI potential based off of previous highs and current price point, but it's not looking good. I mean, you can hope for something to happen. I can love this stock and I can put all my money into it, but that doesn't change the fact of its performance. It's been bearish, it's been selling off, and this is why I call it a Hail Mary type of investment. If you're trying to make money right now, I would definitely stay away from this. It's been losing a ton of money for the past year. The reason I call it a Hail Mary is it's so cheap and its ROI, upside potential is so insane that it could be worth the risk, right? But I would not put a large dollar amount. This is kind of like a super high risk, high reward type of play where it could possibly continue to sell off, get delisted, whatever the case might be. But as of right now, it's just not looking very good for it. And all of those companies that did well during the pandemic are really struggling. PTON, Shopify, Palantir, what else? Zoom, Carvana. Those are all Hail Mary type of stocks where it could be worth it because it's so cheap based off of previous price points. But everything, if it wasn't that company, if it wasn't Shopify and you were to look at this opportunity of current price points and previous highs, you'd be like, what happened? Why is it such a bad, why does it have such a bad performance? I want to stay away from this, right? And that's kind of like what I see from this. There's nothing wrong if you understand the risk and you want to take the investment because of the risk to reward ratios. But if you're trying to make money right now or you're trying to be more conservative, I would definitely stay away from this. So let's go ahead and alrighty. Let's do LCID, Lucid. Yeah, that one's a little different. LCID, so Lucid Motors. I don't know about you guys, but Lucid and Rivian, I've never seen an NIO or a NIO car. I think it's only in China, right? But I've seen Lucids in Arizona. They have an office in Scottsdale, to my understanding. And I've seen some Rivian trucks. So it's cool to see more electric cars on the road. It's cool to see more competition. And I feel like whatever, Elon's goal was is pretty much to like transition the automobile industry into, EV. He's done it, right? It's like mission accomplished. So, and in doing so, he also became one of the richest people in the world. So it's a double whammy is what I like to call it. LCID, again, very similar to a Hail Mary type of play. It's very oversold based off of previous highs. If you believe in the company and what it stands for, great. I think right now it's a shot in the dark. It's such a new company that there's not much to go off of other than the idea that it's trying to, gain its footprint in the EV space. So if I were to take a position on this, it would be a very light position and understanding that I'm only doing it because of expanding markets. But if things continue to get worse, it's new companies like this that are more likely to fail, especially in our economy, right? If growth is stunned, if we actually go into a full market crash, then companies like this most likely will not survive, as people are not spending as what they were spending like last year, right? So it's just things to take into consideration. It's good to respect the risk, but to also not be afraid to take advantage of opportunities. So Hail Mary type of approach. If you're trying to make money right now, probably not a good play. If you're trying to, invest into the future, but you know that it comes a little bit riskier, then this could definitely be something that meets your criteria. What's going on, Umar? What's up? Let's see. So what is your plan for Monday? I'm going to take it day by day. So, we have 2 days up until that Fed FOMC minutes meeting, right? So I'm going to take it day by day. I'm going to watch my position size. I'm not afraid to buy the dip. I'm never afraid to take advantage of an opportunity. I'm just really watching my position size, and I'm trying to lead by example where, I don't want to sit on my hands and be like, oh no, but the market can sell off, right? My job as an investor is to mitigate my risk. It's not to avoid it. I will never avoid a red day. Red days are inevitable, right? Our job is just to only put ourselves in positions that we're able to tolerate. I think that's what's most important. So let's go ahead and do Google. Let's break Google down. So Google is another company that we're talking about today. As it's approaching previous lows, it actually surpassed previous lows. Look at that. Google is very oversold based off of previous lows. Obviously, it can continue to sell off, especially after the Fed FOMC minutes. But based off of our current price point and previous highs, 47% ROI. I don't know about you, but I don't think Google is going anywhere. If you think of what Google is and how it makes its money, and you actually look at their assets, at how much money they print every single quarter, Google is a money-making machine. It's the number one. It's the world's largest advertisement platform. It's insane, right? It's the world's largest search engine. Google's not going anywhere. With that being said, it offers nearly a 50% ROI. I feel like, again, if your intention is to invest long-term, if you can tolerate the time that it will take for the market to recover, I think Google is a great stock to look into long term. If you're trying to make money right now, then probably not a company to care about as of right now. So, alrighty. What else are we gonna do? So we're gonna do Apple. So let's see. Right. Ads are just down right now. Yeah, ads are down for sure. But it's not just like Google's ads are down. It's every ad is down, right? So the idea of, because you can't properly target people because of those new restrictions, it's less encouraging to want to, invest more money into marketing. It just makes it less attractive. Nvidia. Based off of previous highs, 346. Based off of current price points, 128. Huge ROI potential. So from where we're at right now to previous highs, what is that? That's almost 200% ROI. So it's absolutely insane. Nvidia, just like AMD. AMD is another micro device. What is that? Yeah, so AMD is also very oversold. I just feel like Nvidia, especially right now, and AMD have just really been struggling with what's been going on in the US and, the idea of now manufacturing our own chips and stuff like that. So they've definitely been struggling. I still think that they're market leaders in what it is that they do. I just think that it's going to take much more time for these specific type of stocks to recover than expected. But again, this is not a company that I would buy right now with the intention to make money anytime soon. Things can get worse before they get better, but these are companies where I feel like people are going to look back 5 or 10 years from now and be like, wow, I once was able to buy Nvidia at $130 a share. I think they're companies that will grow over time and that are very valuable companies and that are market leaders in what it is that they do. And that's for both Nvidia and for AMD. But again, it's definitely going to take time. So... All right. So please analyze Indian market. I don't have access to Indian markets. So Unity is a steal right now. What's the ticker for that? All right, so we got Tesla. Tesla is probably one of the few stocks that's been holding very well after last week's performance. It's probably trading higher than what it was last week. Right now it's trading at $300 a share. Tesla's kind of doing its own thing. You guys could see that resistance that we have right around 300. If we break above that, we're going to try to make our way to 350, and then after that it's 400, right? If we do break below this moving average, I think that this Fed FOMC minutes is going to, kind of determine that. But if we pull on back, it has a support right around 270, 275. Again, I think that right now with Tesla, it can be a great potential long-term play. For day trading, I mean, because it's already at a resistance pretty much, I don't really see it to be worth the risk, but that's just me, right? If I see it aggressively dip, then yeah, I would definitely love to pick up some Tesla and maybe go into a swing trade, and or if your intention is to invest in something long-term. SPCE, yeah. SPCE is, I'm not the biggest believer in, in Virgin Galactic versus something like SpaceX. Obviously, this one's public or publicly traded. Yeah. So right now trading at $5 a share. It was previously trading at $50 a share. So overall direction's not in your favor. It's making lower highs, lower lows, right? Again, if you were to be showing an example of a stock to not invest in, I feel like this is what it would show you, right? If a pattern can tell you yes or no, direction is simply not in your favor, and it's so bearish for the past, pretty much a year and a half. It's been bearish. And because of that, again, why try to predict the bottom of something? Just wait for confirmation. There's so much upside margin that there's no reason to. There's no reason to try to force an entry on something that's so consistently selling off. Just save yourself time, save yourself money, stay patient, set those alerts, and then wait for that confirmation. So are you in any positions on Wednesday? I'm still holding my long-term plays, and I still have, I have 11,000 shares of TQQQ. So right now my average purchase price for TQQQ, I believe, is at $27.60, something like that, $27.70. I announced it to our Learn Plan Profit group, so I made sure that I kept them up to date. I bought another 10 or 11,000 shares at like $24, $25, but I sold them the same day on Friday and the same day on Thursday. So I'm still day trading TQQQ throughout that volatility, but I'm not selling those 11,000 shares that I originally bought. I still think that the market's very oversold. It's a lighter position for me in comparison to my full position, and I'm excited to buy more leading up to it. So, and I will still keep those shares. I'll still keep an open position on TQQQ even during the Fed FOMC minutes. I might reduce it a little bit. But again, I'm not here to time the market to try to be perfect. I'm okay with having some money in the market, understanding that, yes, I am open to risk, but long term, I can tolerate the time that it will take for the market to recover. And that's what I understand, right? I don't need to try to make the most money right now. I know that we're in a good position long term, and I know market will recover. It's just, can I tolerate the time? That's really the only battle, right? So again, this is why we talk about position size so often. Let's go ahead and break down two more stocks. If you want me to break down your stock, again, drop a thumbs up on this video. Make sure that you subscribe and make sure that you share your top stock in the live chat. So let's go ahead and do some good ones. Alrighty. You need to share that ticker symbol. All right, we've already done Tesla, just so you're aware. All right, we got a couple of you guys being pretty active. I appreciate that. And some of you guys are dropping thumbs up. Again, it really does help out the channel. It really helps me out as well. So I really do appreciate it. Okay, let's go ahead and do SPY. I feel like we need to talk about it. For those that are unaware what SPY is the S&P 500 ETF. This is actually great that you're bringing it up because a lot of people maybe don't like focusing on the NASDAQ because the NASDAQ is considered to be more risky or more volatile as it's more focused or has more weight on tech, right? S&P 500 is considered the top 500 most valuable companies according to this index. It's very oversold. It's a great way to have an understanding of how overall markets are doing. And I think at the current price point, it's a great price point to be in, right? Based off of where we're at right now and previous highs, we have the potential to make around 11%. And I think it's a solid play, right? If you're trying to make the most money right now or you're trying to look for aggressive day trades, then yeah, SPY is not going to be it. But if you're someone that wants to get into swing trading, buying and holding a position maybe for a couple of weeks or a couple of months, then maybe this is something that, offers good ROI potential. It's not just focused on one stock, but a series of stocks, right? So, if you're just invested in Apple, those are big moves, right, for Apple, and you're not very diversified as you're just invested in one stock. The reason I like buying and holding these ETFs is, again, you're investing in a handful of what makes up that index, right? And for SPY, again, if you're someone that's trying to go long term, that you don't want to be very heavily leveraged and you want to be diversified, it's a great way to get into the market, be invested in the top 500 most valuable companies, and also, something that's relatively not super affordable, but 385. Again, it's not the most expensive stock. So SPY looks pretty solid. Let's do CRM. So that's Salesforce, right? CRM is Salesforce. Yep. Based off of recent patterns, let's go back to that day chart. Yeah, Salesforce, again, previous highs at 311, current price point 149. That is a 50% loss so far. One of the things that I love reminding our group is, again, the cheap can always get cheaper. This stock has been selling off. It's been losing people a lot of money. It has great ROI potential. Don't overcomplicate it. We're still trading below the moving average. We're trading right now below the EMA as well. We just made new lows, as of Friday. This thing can continue to sell off. So if your intention is to make money right now, I would stay away. If you think that Salesforce has potential to recover long term, then again, I feel like this is a good time to prepare and or take a very small position if you can tolerate the time that it will take for the market to recover. I like that one. Let's do American Airlines. I'm going to add an extra one in there. I really like American Airlines. American Airlines, it's my little secret stock that I do swing trades with my Learn Plan Profit group. So during our live trading sessions from time to time, I will dollar cost average into American Airlines anytime that it's like below $13. I'll buy, like $10,000 worth of it. So something very small in comparison to what I normally trade with. But I literally make money on it every single time. Anytime that it touches 13 and it becomes very oversold, and then I sell it in the 15 plus. It normally gets rejected by this moving average. It's not a dollar amount that I care about. And it's fun. It's enjoyable. It's been a lot of fun. I've been doing it for a while. Anytime that it becomes very oversold, we buy 10,000, no less, no more. Wait for it to recover, lock in profits. Sells off, buy, pushes up, lock in profits. Sells off, buy. Well, this time it didn't go above 15, so I didn't sell. So it's probably going to sell right back off to around $13. I'll buy. And if you think about it, from $13 on average to the moving average, it's nearly a 30% move. It's 28%. And I think that's pretty great, right? For a swing trade to be able to put $10,000 to make $3,000, that's, it's fun for me. It's enjoyable. And it's something that our Learn Plan Profit group and myself gets to enjoy from time to time. So everybody prepare on Wednesday. Yeah, I hope that you guys are ready. We have a fun up and coming week. So again, just so you guys are all aware, FOMC meeting, 2-day meeting, September 20th to the 21st, but it's actually the 21st. We're going to be talking about, not we are, but the Federal Reserve is going to be releasing the interest rate hike for the month of September. So the market is expecting a 3/4% or 0.75%. But some people believe that they might do a full basis point based off of our last CPI data report, which is really just an inflation report, and core CPI, which is everything not including energy and food, came in higher than expected. And core CPI, for those that are unaware, is the only thing that the Federal Reserve can influence. They raise interest rates to encourage people to make it more expensive to borrow money. And by therefore making it more expensive to borrow money, people will hopefully spend less money and bring down inflation. But inflation has not been coming down month over month. We were stuck at 5.9% for 2 months, and then this last CPI data report last week came in hotter. It came in at 6.3%. So I try to keep the way that I break things down pretty simple. I like to do that on my YouTube channel. I feel like a lot of these different news outlets and or reports make it very difficult for the average person that might just be getting into the stock market to kind of like articulate what is trying to be said, right? So again, I upload new videos every single day, and I do also upload videos based off of request. So I hope that you can consider subscribing if you feel like we earned it. And if you ever have any suggestions on videos or how we can make your experience better within our channel, then feel free to direct message me via Discord. And again, that's that first link in the description. So I really do appreciate you guys' time. Again, friendly reminder, my Learn Plan Profit group is the only group that I work with on a closer basis. It's the second link down below. I'm going to be trading live with them as soon as tomorrow at market open. We are running a sale. It's $100 off. And again, you get access to our A to Z video lesson library, private live trading session, daily group chat, and access to our TechBuds HQ. It's a one-time payment. It's lifetime access. If you want to learn more about it right now, click the second link down below, and you will save $100 off LPP 2.0. So if you have any questions, send me a direct message via Discord. Again, if you guys want to partake in our staycation giveaway, if you want to pimp out your trading setup with some mouse pads, some Wall Street apparel, or any type of day trader art and flags, kind of like the flags you see behind me, these are all available at shoptechbuds.com or the fourth link in the description of this video. For those that are going to be asking what platform I'm using, I am using the Webull trading platform. It's free for everyone in the US, and it's the fifth link in the description of this video. I really do appreciate you guys' time. Hope that it earned you a thumbs up. Please consider subscribing and follow me on Instagram, and that's that third link in the description. I appreciate your time. Like always, let's make sure that we end the year on a green note. Take it easy, team.